So there is that much of scope in the world of technical analysis, where the focus is primarily on the number game. The focus is primarily on the stock price movements. Generally, what most of the broking firms do, using charts and using some charts, understanding patterns, and then making your decisions of buy and sell kind of stuff. That is what is the world of technical analysis, right? And probably when as a financial guy, technical analysis is just a supporting tool. Major focus is on analyzing the financial statements of the company and making a kind of investment decision, whereas technical analysis is more for a short term trading kind of a standpoint. People depend a lot on technical analysis, but if it is more from an investment kind of a standpoint, the focus is more on fundamental analysis, or typically what any financial analyst is, or any CFA would end up doing as a part of the profile, fundamental analysis. So technical analysis, just for understanding a chapter, has been introduced, but nothing more than that. After the level 1, there is no mention of technical analysis anywhere else. So it's just to understand. So the number of questions also would be pretty minimal, though the chapter is slightly long in size. The questions and the focus may not be that heavy on that. So with that as a base, if we get into it, it's a simple. Here we don't understand which company, even without knowing what company is it, I can come out with my buy sell decisions. So how did that company perform? Is it generate? Did it? Is it? I mean, does it have any issues in the political world, or does it have any issues with financial statuses? We don't look at all those things. What we say is, history reflects the future. Whatever are the stock prices in the past, probably by just analyzing those patterns and those trends, we would like to predict for the future. That is what is simply the world of technical analysis. People plot charts for last 5 years, 10 years, observe some kind of patterns in the graphs, and they say that the same pattern could repeat again. Whatever are the patterns, some identifiable patterns, they call head and shoulders pattern, they call cup and handle pattern. Whatever are the kind of shapes that are being observed, they try to correlate it with some event. Okay, during this time this shape has come up, or for every 6 months this shape is repeating. And probably when two heads come out simultaneously, after that the stock price is going to fall down. So it is like just an why it is falling down, there is no answer in technical analysis. This is the pattern. Basically, it plays with the behavior of the investor. Takes the collective behavior of the investors. So, because human behavior may not change. See, in a difficult time, or in some specific times, human behavior always reacts in the same way. Whether it is your old generation or new generation or whatever is the generation, that is the basic assumption which technical analysis goes with. It's a purely a behavioral related way of investing rather than a financial related way of investing, right? It's a non-financial guy's perspective. So basically it's like, okay, when it has gone up 2 times, there is a chance that it will fall down. Probably it may not have fallen every time. 75% of the times it might have fallen, 25% of the times it might not have fallen. But still, they may come out with a conclusion. This is one of the patterns. Whenever you see two kinds of peaks, you will observe that the stock price will go down. So based on some of the patterns, so like that, there are hundreds and hundreds of patterns which people have identified, and based on that, people are doing the trading. Right. So the prime thing is on studying of the market trends and patterns itself in a graphical kind of a format, and they are very much applicable if that security is freely tradable, no restrictions, right? Sometimes I cannot sell more than this much, right? If the price goes more than this much, the trading is stopped. If we have these kind of restrictions, right, or quantity wise, I cannot sell at any point more than this much quantity. In these cases, there will be a small obstruction to this technical analysis. But wherever it's a free market, because it's a behavior, probably some investors will say, oh, the price has already gone up, let's sell it off. While at the same time, some other investors may think, yeah, it's booming, so let's buy it now. So it's that collective behavior is what typically the technical analysis is presenting. So basically, it doesn't talk about why something has occurred. It only talks about what will occur in this scenario, right? Probably it's like studying so much of historical data, so much of historical pattern, and based on that, trying to see what is happening after this pattern has come up. After some pattern has come up, what has happened? And probably assigning probabilities and all those things and coming up. That's the reason I think it was included in quant for us. Right? Because of something going up, something going down. Though we don't do any kind of big calculations as a part of this exam. But typically, because of that assignment of the probabilities and all those stuff, there is an inclusion of this into the quant. So some of the key beliefs that it goes with are trends and patterns repeat. Right? Even in every case also we see, even right from the songs and melodies also, the old ones are getting remixed and repeated. So there is a lot of influence of the past on the future every time, whatever may be the generation. So even the belief is with respect to prices also, the patterns are more or less kind of repeatable. So the more you understand patterns across multiple companies, across multiple time periods, it says probably you can use that information to do the prediction. And human behavior, the another assumption that clearly it makes is human behavior is similar across all the periods. Not everyone is fully aware of investing. Right? There is a rational behavior, there is an irrational behavior. Just because my friend said buy this, I'll buy it. So, or just because someone else said that this is going to grow up, I'll invest in that. I may or may not use my own evaluation tool. That exists in the past, even in the future. Though the volumes grow, number of people investing grow, the percentages knowledgeable versus ignorant are probably the rational versus irrational behavior, that proportions will still continue. That is what is the basic premise which the technical analysis goes with. And so it is a reflection of the collective sentiment of the market. And it says the markets are not fully efficient. So you can actually take that advantage of some level of inefficiency that is existing in the market for a short period. Inefficiencies means probably chance of making riskless profits. So that is existing. So probably if you do this kind of short-term analysis based on the psychology, based on the behavior, you may try to make some abnormal profits in the short term. That is what is being driven by this world of technical analysis. And as I said, in technical analysis, I don't need to even bother about what company I am analyzing. I just need the data for the last so many years and a graph for that. Even without knowing what is the name of the company, I can do my technical analysis decision. Whereas when I am doing a fundamental analysis, I require what is the company, in which industry is it operating, last 5 years or 3 years or whatever is the number of periods, annual reports I require, financial information I require, management, who are their management. It's a big long process, because there the intention is from an investment standpoint. how good is this company for investment purpose? What are the credentials of this company? Whereas in short term, it's a game, right? So we are so the technical analysis is more from a very short term standpoint. Intraday trading is what goes heavily with technical analysis, or probably for a few days. But anything for more than that, we are calling it as investing. And we use fundamental analysis itself, where we see what is its true price, right? In buying any of the things, right? Probably it's like this. Probably if my intention is buying a product, I analyze 200 things before I invest in that, right? Probably buying a laptop, I look at 200 items and even what would be its true price. 40,000 is good for it. He's charging 45,000. So probably I may not buy it. Probably you come out with your own evaluation mechanism of 45,000 or 40,000. Probably what is the RAM, what is this, what is this. You have your own evaluation mechanism to arrive at that. Anything you buy in your real world, right? Even when you are investing something in a CFA exam also, there is a calculation that might have gone behind it, right? So that is what we are calling as fundamental analysis. Whereas when I am talking of technical, let's say I want to rent a laptop. Very minimal things I look at. Anyhow, I have to pay whosoever is giving me for less rental. Probably that is the guy whom I would be preferring, at least the basic functioning happening and giving me for a lesser rental. So there the kind of evaluation mechanism is completely different. And here the evaluation mechanism is completely different. If I am looking at something for a very short term purpose, the way I look at it is based on some patterns or something. And if it is for a long term, I look at the consistency. Right? So that's the difference between your technical analysis world and fundamental. In technical, we don't even talk about inputs that drive the output. Right? The performance of the company is what drives the stock prices. But what we are saying is just observe the stock prices and not what is driving them. Whereas in fundamental analysis, our focus is more on the inputs. If the inputs are strong, obviously the output will be strong. That's our assumption in fundamental analysis. Work on the inputs which drive the stock price. Whereas technical analysis says whatever are the inputs, let's observe the output. Right? Probably another better example I can recollect in this case, if you have to decide probably joining a good MBA, right? Just using a vague or probably a better relevant example. Let's say you want to choose a B school to join an MBA. When I am using technical analysis, my intention is just the output. Placement, average salary, what was the average salary for last whatever periods, what are the salaries of each of the people, join. Right? Make a decision based on that aspect. Whereas when I am doing a fundamental analysis, I do much more than that. Okay, what is the worth of what is the curriculum, what is the worth of the faculty, what is the worth of peers, right? What kind of people are joining that kind. So there is a lot more. Probably there the intention is, if this is strong, probably the output will still be stronger. So that is more of an investment decision. We observe the inputs which drive the output. Whereas in case of technical analysis, I just observe the output and do some kind of manipulations and churnings and calculations on that output to take my investment decision. That is the world of technical analysis. Right. So some more things, especially where financial statements are not there. Let's say we are talking of commodities or currencies. It's not a company. There's no financial statement in place. For these kind of stuff, technical analysis is better. But for a stock where both of them are possible, I mean financial statements do exist, some